Start with the practical, but before starting the practical, I will give you a quick review of the format. See the format here: income and expenditure account and opening and closing balance sheet. I will give you a quick review of this both the formats. So see, in why do we prepare income and expenditure account? We prepare income and expenditure account to calculate surplus or deficit. When there is surplus, if credit side is greater than debit side, then there is surplus, that means excess. And if debit side is greater than credit side, then there is deficit, that is shortage. Now where this surplus and deficit goes? This surplus and deficit goes in the closing balance sheet. And why do we prepare this opening balance sheet? To calculate capital fund. Okay, I have told you earlier also, we prepare opening balance sheet to calculate capital fund. How we calculate capital fund? Asset minus liabilities is equal to capital fund. And this capital fund, this particular capital fund comes straight in the closing balance sheet. Okay, see here, capital fund. Okay, this capital fund will, the capital fund which we are calculating in the opening balance sheet, this will come directly in the closing balance sheet. Okay, now with this capital fund, if there is any lifetime membership fees, we have to add it over here. Okay, and along with that we will add the surplus which will be calculated in the income and expenditure account. Okay, that one will come or will be added with the capital fund. Okay, and if there is deficit, okay, if there is deficit, then that must be deducted. Okay, if there is deficit, then that must be deducted from the capital fund. So this is all about the format. Now we will start with the sum. So we will start first with question number 32. Okay, question number 32, you can see that in question number 32 they have asked you to prepare only income and expenditure account, but I have added to do balance sheet also. This is for your knowledge. Okay, so and one more reason is there. In 2020, means this year, what happened, they have given two questions of 6 marks, means optional questions. In the first option, they have asked only to prepare income and expenditure account. You can see that they have asked only to prepare income and expenditure account. But in the second option, they have asked to prepare income and expenditure also and balance sheet also. Normally in the question they will ask you to prepare balance sheet of the end, means the closing balance sheet. But to calculate the closing balance sheet, you have to calculate the you have to make, sorry, not calculate, you have to prepare the opening balance sheet also. Otherwise, from where you will get capital fund? So if you are asked to prepare income and expenditure account and balance sheet, then you have to prepare income and expenditure account also, and at the same time both the balance sheet. Okay, now we will start with the sum. Now see, first get a look of the sum. See, balance brought forward. Balance brought forward means this is the balance in the beginning of the year. Okay, cash and bank balance is there. Okay, and this is for beginning. Clear? And see, in the last part of the question, balance carried forward, that means balance at the end. This is the balance at the end of the year. Now see here, there is one additional information. Managing committee decide to treat 50% donation and legacy as capital receive and balance as revenue receive. This means that 50% of the donation will be treated as revenue received and 50% will be treated as capital received. Okay, now what will happen, that will see in the sum. First, since it is in the additional information, mark the adjustment. I have already marked here. See, donations and legacy. Clear? Now let's start with the sum. Now we will go one by one. Okay, the first transaction, balance brought forward in beginning, that means cash and bank balance in beginning. So we will record, since it is in the beginning, so we will record it in the opening balance sheet. Okay, so here we will write cash in hand. Okay, cash in hand 20,000 and cash at bank 13,000. Okay, since again I'm saying, since it is in the beginning, so cash in hand 20,000 in the opening balance sheet. Okay, cash in hand, cash at bank. Okay, now next is donation. Okay, now see receipts. Receipts means what? Receipts, can you see that? Receipts means income. Okay, whatever is recorded in the receipt side will come in the income side. Receipts, income. Receipts, income. Okay, but you must remember that should be of revenue nature. So now donation have adjustment, so we will write by. Since we are recording in the credit side, so we will write here by. Okay, since it is in the credit side, we will write by donations. Don't write the amount, just write the transaction. Next, subscription, no adjustment is there. Receipts means income. Okay, don't forget, receipts means income. So here no adjustment is there, so we will write here directly by subscription. What is the amount? 60,000. Okay, 60,000. Can you see? Okay, now come to legacy. Okay, legacy adjustment is there and it is recorded in the receipt side, so it will come in the income side by legacy. Don't write the amount, just keep it blank because adjustment is there. Now interest. Okay, now next item is interest. Interest is recorded in the receipt side, so it will come in the income. Okay, by interest. What is the amount? 2,800. Okay, we have recorded. Next, miscellaneous receipts. Again, miscellaneous receipts will come in the income side by miscellaneous. I'm writing the short form, don't be confused. Miscellaneous receipts 7,200. Okay, so just see the receipts item, where the receipts item have gone. Have you seen it here? See, balance brought forward, that means in the beginning cash and bank will come in the opening balance sheet. Cash in hand, cash at bank. See the amount 20,000, 13,000. Now the rest things, donation have adjustment, so we have not written the donations have adjustment, so we have not written the amount, we have kept it blank. Then subscriptions have no adjustment, so we have recorded it here. Subscription we have recorded it here. Okay, then legacy have adjustment, so we have recorded it but we have kept it blank. Then interest, we have recorded it here since it is in the receipt side, so we have recorded in the income side. Okay, then miscellaneous receipts, since it is in receipt, we have recorded in the income side. Now it's time for payment side. Now administrative expense. Payments means expenditure. Payment expenditure. Okay, so since it is in the debit side, so we will write 2. Okay, to administrative expense. See, administrative expense, what is the amount? 64,000. So we will record here 64,000. Okay, administrative expense 64,000. Now next is repairs. Okay, repairs is also an expense, so it will come here in the expenditure side. So 2, I'm writing it over here, 2 repairs. See the amount 3,200. Okay, so here I have recorded 3,200. Can you see that? Okay, now again next item, focus on the next item, that is rent 2,000. So it is an expense, so we will record here 2 to rent. What is the amount? 2,000. So we will record here 2,000. Okay, rent, we have recorded rent 2,000. Now investments. See, investment, where we will record investment. Investment is not an expense. Okay, investment is not expense, right? It is not an expense. Okay, investment is not an expense, so it will be recorded in the closing balance sheet. I hope you know that investment goes in the asset side. Okay, so, and since it was for the year ended, right? Ended means what? Closing balance sheet. Okay, oh, I forgot to write the date, so write the date for the year ended 31st March 2013. And here, since it is 31st March 2013, right, closing date is 31st March 2013. So the beginning of the year will be 1st April 2012. Okay, opening date will be 1st April 2012, and closing date will be as on 31st March 2013. Okay, clear? Okay, now coming back to the question, as I told you, investments. Okay, can you see investments? I hope you can see. Okay, investments. So see, investments is not an expense. Listen properly, investment is not an expense, so it is recorded in the asset side of closing balance sheet. Asset side of closing balance sheet. Okay, since it was recorded in the receipts and payments account, and it is for the year ended, so it is will be recorded here. Investments, keep some space for the other transactions. Okay, investments, see the amount. What is the amount? 16,000. Okay, so here we will record investments 16,000. Okay, I hope you can see investment 16,000. Next item is salaries. Now salary is an expense. Okay, salary is an expense, so 2 salaries, the amount is 14,000. Okay, salaries, since salaries is recorded in the payment side, so salaries will come in expenditure. Okay, salaries. Next, furniture. Now as we all know, furniture is an asset, fixed asset. Furniture is a fixed asset, so furniture will come in the balance sheet. Which balance sheet? Closing balance sheet, because it is recorded for the year ended 31st March, means in the year ending you have purchased, in the middle of the year you have purchased this furniture. Okay, that is why it should be recorded only in the closing balance sheet. So write furniture now the amount is 10,400. Okay, now furniture closing balance sheet. Okay, furniture 10,400. 400. Done. Next, see balance carried forward means at the end. I told you. So that means this is for the closing balance sheet. So balance at the end will come in the closing balance sheet. Cash in hand. Cash in hand amount is 12,000 and cash at bank. Okay, cash at bank 17,400. Clear? Now the whole sum is means the transaction recording of the transaction is done. Okay, now come to adjustment part. See, managing committee, see properly, managing committee decided to treat 50% donation and legacy as capital receipts and balance revenue receipts. And balance revenue receipts means 50% will be treated as capital receipt. And I told you in my I have told you that if balance means if anything donation or regarding legacy, if it is mentioned in the question, then you have to treat it accordingly. See, in the notes we have given, okay, specific donations as capital receipts recorded in liability side of closing balance sheet, right? So here 50% of legacy donations and legacy will be treated as capital receipts. So according to the note, it will go in the liability side of closing balance sheet. So here we will record donations donations 50% of, okay, 50% of, what is the amount? 50% of 20,000. So 50% of 20,000, 50% of 20,000 means 10,000. And same with legacy also. So regarding legacy, if so they have told that if it is capital received, then it will go in the closing balance sheet, okay, liability side. So here we will record legacy 50% of, now what is the amount of legacy? 16,000. Okay, amount of legacy is 16,000. So here 16,000 is how much? 8,000. Okay, now see, now 50% is, if 50% is recorded here, then the rest 50% will go here. Okay, so here we can write 20,000 minus 10,000. So here it will be 10,000, and here for legacy also 16,000 minus 8,000 is 8,000. Okay, I hope the sum is clear to you. Okay, if any confusion is there, you can call me. Still now the sum is not complete, just see it. Okay, now we need to do the calculation. Okay, so here we need to calculate. First we will see the total of income side. Okay, so the total of income side is, let us calculate. I have the calculator. Okay, 10,000 plus 60,000 plus 8,000 plus 2,800 plus 7,200 is equal to 88,000. So here income side is 88,000. Write with a pencil. You can write with a pencil. And now the total of expenditure side 64,000 plus 3,200 plus 2,000 plus 14,000. Okay, total is 83,200. Okay, the total is, say, the total of expenditure side is 83,200 and the total of income side is 88,000. That means in this case credit is greater than debit. That means there is surplus, right? That means credit minus debit. Okay, so the surplus, so here write 88,000 in both the sides, 88,000. okay, so 88,000 here also 88,000. okay, now to surplus, so surplus will be how much? 88,000 minus 83,200, so the result will be 4,800. so we got the surplus. Okay, now come here and closing balance sheet. In closing balance sheet only two items is there, so we can easily calculate. Here it is 33,000 and here also 33,000. okay, now capital fund balancing figure 33,000. okay, see here we have got 33,000 as capital fund. Now this capital fund will come in the closing balance sheet. So here we will record capital fund 33,000. okay, and now this surplus, okay, I have told you this surplus will be added with the capital fund. Add surplus 4,800, which will make the total as 37,800. Now according to the rule, both as liability side and asset side should be equal. In the closing balance sheet, liabilities and assets should be equal. So I will calculate the total. So the total will be 55,800, this side also and this side also 55,800. See, the sum is done. Okay, you can see here we have calculated surplus. The total of income and expenditure is 88,000 and the surplus is 4,800. Here we have done both the balance sheet. Now in the opening balance sheet we have calculated the capital fund. The capital fund is 33,000 and same will go in the closing balance sheet. See here, capital fund 33,000. Now we have added the surplus. This gives us 37,800. Now the total of the closing balance sheet is 55,800, both in the liabilities also and in the assets also. Okay, so the sum is done.